Hello, everybody. Welcome to our Howzit Expats webinar for October for the island community. Great to be with you. For those of you that haven't attended one of these webinars before or listened in, my name is Lamont Kritzinger. I'm the founder of Howzit Expats. I'm a global financial coach. Just to say that these webinars are now pre-recorded, and the purpose of these webinars are intended to provide information, factual information, for South African expats and not provide advice as such. Just as a reminder why we exist, we'd like expats all around the world to thrive and not only survive in their communities. That's what we are all about. So just very quickly to say, this is our first pre-recorded webinar in Ireland. So we've changed for those of you that have been on our webinars before, we've changed the way that we do our lucky draw. So this will go out on our Facebook site. And just to say how it will work as from now, quite simply, is you should be quite aware of what we do with the Shoshalorza wheel now. You can spin that to your heart's content. So great prizes up for grabs. And how it works is the magic number, the combination number for this webinar for Ireland is 111. So between now and the 16th of November, today's the 14th of October, between the 14th of October and the 16th of November, if you get a 111 and you're the first one to do so, you will win our grand prize, which is a selection of any one of our mystery prizes, plus a 12-month free Howzit Expats membership. If you're the second person to get 111, you will win the runner-up prize, which is a free 12-month Howzit Expats membership. All right, so it works very simply. Actually, just to show you the prizes quickly, we have some amazing partners and sponsors in Howzit Expats. I just want to call them out by name. Just go through that list quickly on the screen there. We have Colleen Quist from CQ and Associates. She's a life coach based in Johannesburg. And if you've been following our webinars, you'll know that she's one of our anchor slots in a session called Rerooting, which is a really important session for us, for expats and want-to-be expats. Then we have a partner in Ireland, a tax consultancy called Tax Key, Mairead Hennessy. You'll hear from her a little bit later. She's also part of our anchor tenant lineup. And then we have Garvin Rush as well from Dublin Tour Guide, who has offered an amazing, quite expensive this really, just in terms of value, in terms of prize, but quite a great prize that he's given to us, their 3-hour Dublin walking tour for a group of 5. And then the SA Gathering, the date to be confirmed for next year, but a family ticket there from the SA Gathering, kindly donated there by Beryl and Teeling. And then Biltong and Drovor's hamper, from Jeanette and the team there at Uncle Bok, €100 voucher for the Horse and Hound in Delgany near Greystones from Kevin Moose, and then SA Braai, 2 SA Braai meals, and you're going to hear about that, all about that today. All right, so if you do get a 111, then you can choose, and you're the first one to do so. We get the data at the back end, then you will be winning one of those prizes. All right, so just to explain a little quickly what you need to do to enter the lucky draw. Basically, there's going to be a little demo straight after this, but you just fill in your details on the link. There's the link, shoshalorzaWheel.online. Okay, you just click on that and you put your details in and you register and you spin away. You get 3 spins. Every spin is a number, and the 3 numbers in a row are combinations. So this month, if you're in Ireland, you are looking for a 111. So best of luck. I'll quickly show you what the demo looks like straight after this. Okay, so that was the demo for the spin, the 3 spins wins. So good luck for that for October. Just a couple of quick slides before we jump into the agenda. Just as a reminder, the purpose of our community in Ireland. This is an island-specific community, and we are focusing on the expats in Ireland. We're wanting them to thrive. We're very focused on well-being as the primary objective. We have a very nice website, howzitisland.ie. If you haven't yet seen that, go and have a look at that. We focus very much on these webinars, these community webinars. We always have the next date there. The next one, in fact, is the 18th of November. We give businesses an opportunity to showcase their wares and to collaborate with expats. We have events and webinar section and a community section. So lots there in the website. We offer actually some free advertising as well, packages, and then some paid advertising packages from as little as €8 a month, all the way up to our homepage advertising. So you can look at that if you like. Lots to see. I'll just click through a few slides here. We've got, we use GeoDirectory, so you've got a map. You can see where everybody is in Ireland. And that's what some of the events and the webinars look like on our events and webinars page. You can also become a thought leader in Howzit Expats. In fact, today we have a thought leader presenting all the way from South Africa. And you're welcome to partner with us to become a thought leader and take part. Quite a lot of benefits to become a member of Howzit Expats, specifically all the information. You get financial fact find, complimentary sessions with a global financial coach. You can vote on a webinar topic. You can ask the expert. You get access to our quarterly newsletter and a whole lot more. So have a look at that, and that's available to you. All right, so let's dive into today's agenda. So this is our standard agenda that we have. Not exceeding 60 minutes. Today's a little bit shorter, in fact. And we've focused on the financial well-being topics, and then our anchor topics and also partner news. All right, so today's financial well-being topics are 2 really important topics that impact all expats, every one of them. So the first one is around tax residency, all you need to know about tax residency. And we have one of our thought leaders, SL Law, LaRue and Sampson Incorporated, actually presenting on that today. Thank you very much to them. You'll hear about them shortly. And then we have a session on the transferring of funds to and from South Africa, and in terms of money back and forth between countries. So those are our financial well-being topics. And then you're going to hear from our anchor tenants. We call them Triple T, Top Tax Tips, our session on rerooting, and then an Ubuntu session, all around integration, cultural integration with South Africans and the Irish. All right, just to give you a sense, the next webinar lands on the 18th of November, and you can actually go and vote on your favorite topics. If you have specific topics in mind, you can have a look at our website there. There's a page just on that. All right, so to today's agenda. So it gives me great pleasure to welcome Jan Hendrik Opperman, who is part of SL Law, LaRue and Sampson Incorporated in South Africa. And he's going to be talking to us about tax residency, all you need to know. It's just over 20 minutes. It's a really good slot, I think. So thank you very much, Jan Hendrik. Lots of information there, lots of things to think about. So if you are a wannabe expat, or you're an expat already, or you're returning back to South Africa, have a listen to what Jan Hendrik and SL Law have to say about what you should be thinking about around tax residency. So without further ado, I'd like to hand over to Jan Hendrik to take us through the tax residency topic. Over to you, Jan Hendrik. Thank you very much.
Hi, everyone. I am Jan Hendrik Opperman at SL Law here in Cape Town. Warm welcome out of a wonderful day here in Cape Town. I actually had a bit too much sun over the weekend, so hope everyone is doing well. Thank you for the opportunity. We are looking forward to joining the platform with Howzit Expats Global, Howzit Expats Ireland, the UK, Australia as well, and to be a part of this journey. As today's topic is tax residency for expats, I thought I'd just like to quickly take you through a few points of consideration regarding this topic. And quickly, this talk will touch on just why tax residency matters. Secondly, how South Africa determines tax residency, becoming a tax resident in the new country. Fourthly, the double taxation agreements between countries, the financial and practical implications around all this, and then just a few key takeaways regarding all of it. So quickly to touch on, understanding tax residency. I understand everyone here has already left South Africa. Primarily, I assume everyone has already. You're sitting overseas from our perspective, and you have left behind your life in South Africa, obviously, on a case-by-case basis, but majority of you are living abroad, even though you're from South Africa. Now, what we can talk about quickly is when we talk about tax residency, a lot of South Africans abroad confuse it with citizenship or the passport that they hold. But these are completely different things. So your citizenship is about your legal nationality. This is about where your right is to live in, work in, and get a passport from a country. It doesn't determine where you pay tax. So your citizenship is about your right to live in, work in, or get a passport from a country. Your tax residency, on the other hand, is about where a country considers you to be based for tax purposes. It's not about what passport you hold, but rather where you live your life. So this includes where your income is earned, where your assets sit, and where your personal and economic ties are strongest. So why does this even matter? It obviously matters because tax residency determines which country gets to tax your income. So if you're still considered a tax resident in South Africa, SARS can tax your worldwide income, meaning everything you earn abroad, from your salary in London or in Sydney or in Dublin to investment income and rental income anywhere offshore. So this often catches some expats off guard because many assume, of course, that once they've left South Africa, started a new job overseas, and opened a foreign bank account, they've automatically stopped being tax residents. But unfortunately, in South Africa's system, it doesn't happen automatically. You remain tax resident until you formally break it, which is a process in itself. So understanding where you're tax resident isn't just a compliance matter. It affects double taxation risks, your financial planning, and peace of mind, of course. So quickly, the first topic or the first point that I'd like to go into deeper is how South Africa or SARS determines tax residency. So South Africa doesn't use a single clear-cut rule to decide whether you're tax resident or not. Just to add to that, initially and always, firstly, we look at your passport. So if you even have obtained your new passport overseas, that will obviously still always reflect if you were born in South Africa, place of birth, South Africa. So in terms of the exchange control regulations of the Reserve Bank of South Africa, you are automatically resident then, except if you formally cease your tax residency, and I'll get to that later, and follow that process. So we can obviously look at this on a case-by-case basis, but those are the outlines. So again, SARS doesn't have a clear rule. That wasn't a rule that I described. It's just how we start when we look at things. So SARS applies two tests from their perspective on a rolling basis. It's the ordinary residence test and the physical presence test. So if you meet either of them, you're considered a tax resident. So for the ordinary residence test, this is the main one. It's not based on how many days you've spent in South Africa, but rather where your home truly is, not just physically, but emotionally and practically. So SARS looks at things like Where are your family and dependents? Where do they live? Where do you keep your main home or property? Where your personal belongings are? Where your business or employment interests lie? And most importantly, where do you intend to return after being away? Now, that's an important one. Because, for example, if you move to Dublin for work, but you still own your Johannesburg home, you keep a local bank account here in South Africa, and you visit every December, and you plan to come back one day, maybe in future, in a few years or so, SARS might still see South Africa as your ordinary residence. So it's a case-by-case basis again. We can, chat with you. We can have an online meeting and determine and apply these tests if you're worried about this or if you have any questions about it. But yeah, you might still be considered ordinary resident in South Africa if you still have assets here, if you intend to return, and if you still do return regularly and keep your assets here. Then there's also the physical presence test. So this one is purely mathematical. If you've been physically present in South Africa for more than 91 days in the current tax year, more than 91 days in each of the previous 5 tax years. So this current tax year, more than 91 days, more than 91 days in each of the previous 5 tax years, and more than 915 days in total over those 5 years, you'll automatically become tax resident, even if you no longer consider South Africa your home. So just to keep in mind, if you're living in Ireland or the UK or in Australia, and you do spend a lot of time in South Africa, it is important to keep this rule in mind. If you have already seen tax residency formally with SARS, please do keep in mind that the physical presence test might bite you if you're not considering that. So also, the moment you spend 330 full days outside of South Africa continuously, the physical presence test falls away and you're no longer considered resident under that test. So on that test, the physical presence test, but of course the ordinary residence test, a lot of tongue twisters today, will still be used to determine your tax residency. So in breaking tax residency, though, it isn't just about meeting these tests. When you do decide to cease your tax residency, you have to formally record it in SARS. It's a formal process, and typically you do that by indicating in your return and during an audit of your departure year that you are no longer tax resident. And there are extra taxes and all sorts of things involved. It's a formal process, and we obviously do assist with that as well. I'll get to that a little bit later though. The key takeaway here is that residency isn't about your location on a map. It's about where your life is anchored. If your life is still anchored in South Africa, SARS may still claim taxing rights over you, even if you're sitting in a London office or in an Australian cafe. The second quick point I want to touch on is becoming a tax resident in your new country. So we've touched on how South Africa determines tax residency, and we can quickly just chat about becoming a tax resident in your new country, and I'll obviously touch on Ireland, the UK, and Australia. So once you leave South Africa, your new country of residence will start looking at you as a potential tax resident. Every country has its own rules, of course, and they often differ quite a bit, so it's important to know what counts where you move. So let's break it down by popular destination, the United Kingdom. The UK uses the statutory residence test. It's based on a combination of days spent in the UK and your connections there, such as having a home, family, or work ties. And for instance, you can spend up to 183 days in the UK before automatically becoming tax resident. But even after quite fewer days, it could trigger residency if you have significant ties. Now, again, we can look at that on a case-by-case basis, so get in touch if you have any questions. Secondly, Ireland. In Ireland, you become a tax resident if you spend 183 days in a year or 280 days over 2 consecutive years. So that's an automatic trigger 183 days in 1 year or 280 days over 2 consecutive years next to each other or following each other, then you are automatically tax resident in Ireland. Ireland also looks at where your center of vital interest is. So if your main home or family is there, you could be considered resident sooner. For Australia, Australia takes a slightly broader approach. They consider you a tax resident if you dwell there permanently, if your domicile is there, or if you spend 183 days or more in a year in Australia. Even temporary residents can be considered a tax resident for certain tax purposes. So the important part, of course, is that you can be a dual tax resident for a while. That means that South Africa and your new country could both see you as a resident at the same time. And this is where the double taxation agreements, or the DTAs, come in to help determine which country has the primary right to tax your income. We'll talk more about that shortly. So the practical takeaway is that you should not assume that moving overseas automatically makes you a tax resident there or stops you specifically being a tax resident in South Africa. Each country has its own rules, and you need to track both your physical presence and your personal ties carefully. So quickly, I touched on it now, the double taxation agreement. Obviously, you all as expats, you have your concerns. Am I going to pay tax twice, once in South Africa and once in my new country? And this is where the double taxation agreements step in. So South Africa has DTAs with Ireland, with the UK, and with Australia, among many other countries. It's not just those three. Their main purpose is to, of course, allocate taxing rights and prevent the same income from being taxed twice. So it's quite important and quite, it's a nice thing that's in place. So here's how it works in practice. Suppose you've moved to London and you are earning a salary there. The UK taxes that salary based on because you're now a tax resident there. If you're still considered a tax resident in South Africa, however, SARS could also want to tax the same income. But because we have a double taxation agreement with the UK, South Africa and the UK, either by exempting the foreign income from tax or giving a tax credit for the tax that you've already paid in the UK, South Africa provides relief. So you can prove that you've paid tax on your salary in the UK and you're tax resident there, then you can provide that proof to SARS, and SARS will credit you on your worldwide income using that credit. Well, they will give you that credit, and you won't have to pay it again to SARS as well. The DTAs also help in these situations where you might have dual residency, and they include tiebreaker rules, which look at things like where your permanent home is, where your personal and economic interests lie, where you spend most of your time, and your nationality. So this means that even if you meet the tax residency rules in two countries, the DTA can determine which country has the primary right to tax your income, reducing the risk of paying the double tax. A key tip for expats is that you should keep records of your time abroad, your employment, and your ties in both countries. It makes it easier to claim relief and defend your tax position if SARS or the Foreign Tax Authority asks any questions. So I'll also quickly touch on the financial and practical implications for expats. So leaving South Africa isn't just a change of scenery, it can have real financial consequences. Here's what every expat should know. So firstly, the exit tax, or deemed capital gains tax. When you formally see South African tax residency, when you formally cease your South African tax residency, SARS treats your worldwide assets as if you sold them on the day that you leave. So it's a snapshot, essentially, of your position, your tax on any capital gains accrued up to that point. Certain assets are exempt, like the South African retirement funds, but it's crucial to get advice on this. Exit tax can be a big surprise if you're not prepared. Obviously, all of you guys have already left, but again, if you have any unresolved issues or ties to South Africa or to any other jurisdiction for that matter, it's very good to get in touch and we can have a discussion on these topics. Secondly, retirement funds and pensions. Your retirement annuities and pension funds in South Africa may continue to grow tax deferred contributions or withdrawals, while abroad can trigger tax implications both locally and in your new country. And professional planning obviously helps you to navigate that. Just on that note quickly, even if you're leaving South Africa, you have sold all your assets, you're done, you're not coming back, you want to cease your tax residency completely in South Africa, and you want to become a tax non-resident in South Africa completely, no ties to SARS, and you have a retirement annuity. If we complete that whole process, we calculate the exit tax and all of that, and we get the confirmation from SARS finally, cease to be tax resident form, where they confirm that Mr. Jan Opperman, ID number, has ceased to be tax resident as at this date, your retirement annuity in South Africa needs to stay in South Africa, will accrue its interest and grow, but you cannot access it. You cannot take it offshore for 3 years. That's just an example. So if you cease your tax residency today, you have to wait for 3 years before you can take those funds out of South Africa. Then also the property and investments. Owning property in South Africa while living abroad can complicate your tax situation, as many of you might already know, as rental income may be taxable in both countries and capital gains on future sales need careful timing. Offshore investment might also trigger reporting obligations in both South Africa and your new country. So again, it's good to get in touch and speak about that on a case-by-case basis for your personal matters. Banking and exchange control. South Africa still monitors foreign transfers and investments for residents. So updating your tax residency status with SARS and the South African Reserve Bank is important to avoid compliance issues. Also, I want to add bank accounts. So if you have formally tax migrated or then ceased tax residency in South Africa, you still had your resident account, which is a normal banking transactional account, a current account. That account, you need to notify your bank, and you have to, with the formal notice from SARS, and that bank has to either close the account or change it to a non-resident account. And transacting with a non-resident account in South Africa has its own headaches, and we can get into that another time, but just keep that in mind as well. It's important. You're not allowed, if you have ceased your tax residency in South Africa, to retain your resident account. It must be changed or closed. It must be changed to a non-resident account or closed completely. Common mistakes that expats make include that a lot of you guys assume that leaving South Africa automatically makes you a non-resident for tax purposes. You forget to declare your income or assets abroad. You don't consider the timing of leaving for financial year purposes. For example, leaving halfway or partway through a tax year can trigger unexpected obligations, and ignoring the double taxation agreements and not claiming foreign tax credits. So your key takeaway for this is planning your exit carefully and keeping proper records, if not optional. It's the difference between a smooth financial transition and years of headaches with SARS or foreign tax authorities. Lastly, this brings me to a close for today's session from my side. The main point to remember is that leaving South Africa is not just a physical move, it's a tax event. So key points for you guys as expats, tax residency is different from citizenship or your passport. So where you live your life determines where you are taxed. South Africa takes worldwide income South Africa taxes worldwide income if you're still a tax resident in South Africa. So it's crucial to know when and how you formally break tax residency, and we can get in touch and speak about that. Essentially, it's the tax migration and the whole formal cease to be tax resident procedure and forms. Every country has its own rules for becoming tax resident. And if you can be a dual resident until your taxation, you can be a dual resident until your taxation or your residency situation is clarified. So that's also a big thing to remember. The double taxation agreement exists to prevent paying tax twice, but you need to claim the relief correctly and keep your proper records. And lastly, financial planning matters. There's an exit tax, retirement funds, annuities, property, and banking all require careful management to avoid surprises and pitfalls. So don't leave these matters to chance. We are part of this platform with you. We are very excited to join in it. Thank you for the opportunity. And yeah, get in touch if you have any questions. Yeah, the whole team here at SA Law in Cape Town. It's Samson Leroux Incorporated. It's our law. We also have an advisory firm, Citus, that can cater to all different needs and inquiries. So happy to get in touch with anyone who has any questions regarding these topics we've discussed and any other legal or tax residency issues. Thanks so much, and back over to the rest.
So thank you very much, Jan Hendrik. A really, really interesting session. Thank you to SA Law for collaborating with us and providing amazing information and very valuable information to South African expats. And this information is actually relevant wherever you go. So you would have heard Jan Hendrik mention Ireland and the UK and Australia, and in fact has application in all other countries as well. So thank you very much. And yeah, need any more information, you know where you can find that. So over to our next agenda item. This is our first anchor topic, Triple T, top tax tips from Mairead Hennessy. Now Mairead has been part of our webinars from our second webinar. So she's been on a while. You would have seen her. And the budget in Ireland has just been released very recently. And Mairead has decided to actually focus on a few of the changes in the budget. So thanks, Mairead, for being on again. And we look forward to what you have to share with us. Thank you. Over to you, Mairead.
Hi there. It's Mairead Hennessy here again from TaxKey. So yesterday, on the 7th of October, the Irish government announced their annual national budget for 2026. And the measures that were announced will be legislated for by the government over the coming weeks. So I'm going to walk you through some of the key takeaways from yesterday's budget and what they mean for individuals and families who are considering moving to Ireland. So I suppose the budget is set in the context of the overall economy, and thankfully Ireland's economy continues to grow strongly, albeit in a challenging geopolitical environment. The economy is projected to grow by 3.3% this year, and it'll continue to grow at a rate of an estimated 2.3% next year. Employment remains robust, with over nearly 64,000 more people in work now compared to last year. So the country is effectively at full employment, which is great news for anyone looking to come here. So opportunities seem to be plentiful across most sectors, including health, education, technology, financial services. So then in terms of the measures that were announced, well, I suppose there was no changes to personal taxes. So the income tax rates, the level at which you enter into the higher 40% rate. The national minimum wage will increase from the 1st of January 2026. It'll now be €14.15 per hour. So that continues to increase. For anyone who's going to be renting their living accommodation, there is a rent tax credit that's been in for the last couple of years, and it has been extended to 2028. So that's good, just to give a level of certainty there. And the shortage of housing remains a top priority for the government, and this is definitely reflected in yesterday's budget. And there was a budget allocation over €5 billion to capital investment in housing for next year, with additional supports to the Land Development Agency, which is the government agency that buys and sells a lot of land around the country for housing development purposes. There's a new derelict property tax, so this is replacing an existing tax. So really what it aims to do is to penalise property owners where they've let the property go into a derelict state, so it can't be used, and they're not selling it, or they're not making it used. So the idea here of this derelict property tax is that it'll prompt these property owners to either put the property in use or to sell the property. But in either way, the idea is to generate further supply. The VAT rate on the sale of new apartments has been reduced from 13.5% down to 9%. The idea here is to reduce the cost of building apartments, and again to sort of generate more of a supply of apartments to alleviate the housing issue. Ireland continues to invest in public services, which is great. So there was a significant amount put aside for investments into both primary and secondary level schools, as well as higher education, post-secondary level education. The free school book scheme has now been extended to the Leaving Cert, meaning that I think basically every student then, whether they were primary school level from the age of 4 or 5, all the way through the primary system into the secondary system until they do their Leaving Cert, on finishing secondary school, should be getting those free school books, which is a great bonus. There's also a new baby boost payment of €420 per newborn that's born from the 1st of January 2026. So I suppose in summary, the budget reflects a shift from, over the past couple of years, there's been one-off cost of living supports that have come through. So we don't have any of those one-off supports this year. Rather, the focus is on long-term investment in infrastructure, housing, public services. So I suppose what I would say for anyone considering a move to Ireland, that, the message is clear. Ireland has got full employment. It's doing really well, albeit with great uncertainty on a global scale. So the country is investing in its future to create stable, opportunity-led environment for individuals and families. By all means, if you have any questions at all, please do feel free to reach out. And thank you very much for listening.
So thank you very much, Mairead. That was really informative, short slot there, and some interesting things happening in the budget in terms of getting a view of what the government is thinking about longer term and how they want to spend the money. Just a little reminder there in terms of a disclaimer there from Mairead up on the screen. Okay, folks, time for our first 60-second slot today. When I see the word Braai, I personally get very excited. So I'd like to introduce you all to SA Braai, and a couple of pictures here just to start. Taste of South Africa. You can see this fantastic Braai van that goes around Ireland. A couple of memorabilia there from South Africa. I can see Madiba there. In a couple of places around Ireland, you will find SA Braai. In fact, this is exactly where you'll find them. The Mespil Market, Wednesday to Thursday, 10 a.m. to 6 p.m. And then in Skerries, Friday, Saturday, Sunday. There you can see the times, 5 o'clock to 9 o'clock Friday, Saturday. And I'm sure if you rush to SA Braai, they'll probably stay open a little bit later. So it gives me great pleasure to introduce you to the owner, Wiseman Mangaliso. I actually met Wiseman recently. I was touring Skerries, and there's actually a picture of us bottom left there. And there you can see some of the great products, and you can buy some South African drinks, and there's chutney and all sorts of things. So our 60-second slot, a little countdown, and then I will hand over to Wiseman, who's going to tell us about his business, SA Braai. Over to you, Wiseman.
Yeah, thank you, Ned. How are you guys? How are you? Wiseman Mangaliso. Yeah, South African Braai. We are based in Skerries, as you heard, and also Mespil every Thursday. So yeah, we do a lot of variety of obviously food, South African food, obviously the boerewors, and beef brisket, peri-peri chicken, beautiful fries, and also do some festivals all around the island. Also booked in for a wedding for a South African in the north. So yeah, we try to do a bit of everything, the gathering of South African and down here and the north as well. So yeah, come down to the food truck whenever you get a chance, especially weekends in Skerries, and come and experience a bit of real braai on charcoal. And yeah, we are just here to make sure every South African feel about a bit of homey and from like home from away and all that. So yeah, good to see you guys, and hopefully to see more of you. Cheers.
Excellent, Wiseman. Thank you so much. Can I ask you one quick question, Wiseman? Your most popular product on your menu at the moment?
It's actually the beef brisket.
The beef brisket, amazing.
Yes,
I'll have to come and
yes.
try that. I haven't had the beef brisket. So, Wiseman, thank you very much. I hope to see you soon, and I hope to see all the South Africans and the Irish, in fact, around your SA
Yes.
van in Skerries. So we'll chat soon. Thanks, Wiseman. All the best.
Thank you very much for that. Have a good day, okay?
Cheerio. Bye bye.
Cheers, cheers. Bye-bye.
Yes, so just thanks once again to Wiseman there. Really amazing to see him, and he has amazing food. So please do support him. So, on to our second financial well-being topic for today, which is I'll be presenting this just at a high level, transferring funds to and from South Africa. So, this is about moving money around. I'm going to share some important facts with you. I'm going to share a little bit about money out, moving money out of South Africa and moving money in. But I thought I'll start with a quick story. So, I remember going overseas for the first time, very lucky to go overseas when I was young with my parents. And I remember my dad taking along what looked like a checkbook and traveler's checks. And I tried to figure out how this works. Quite a complicated process, really. But we've come a long way since traveler's checks and having to get cash before you go to a country to have their currency, before credit cards and debit cards, and those things were quite prevalent, to many different ways of actually moving money around. So the world's changed a lot, and all governments around the world are generally quite interested in what happens with funds in and out of their countries. Some are more relaxed than others. South Africa, in fact, is a country that's probably a little bit more controlled than others in terms of exchange controls. All right, so just a high level, quick overview on money in and out of South Africa. So, in terms of important facts, just a couple of points. So, that is important. Point number one there. It is important to do this all correctly, to follow the procedures. Compliance is really important in terms of transfer of money in and out of South Africa, doing it the right way, using the right paperwork, and getting your house in order. There is scrutiny from the South African Revenue Services, SARS, and in fact the Reserve Bank specifically as well. All right. So just the first point to make is just ensure that you follow the correct process in terms of getting money in and out of South Africa as a general statement. Point number two, exchange control. In fact, South Africa is one of the few countries that has quite strict exchange control in terms of money leaving South Africa. And that falls under the South African Reserve Bank. They're already interested in what happens to the flows of funds. It has been relaxed the last couple of years. It used to be a lot stricter, actually, many years ago. So there has been more relaxation around this, but there are still controls in place, as you'll see in a second. And then there's this concept of authorized dealers. So authorized dealers are licensed banks, intermediaries that can process foreign exchange, forex transactions. Also important that you actually deal with the right kind of entities and people who are authorized dealers and able to do this from a South African perspective. Tax residency status does play a role in terms of different rules and different procedures that govern the flow of funds. So whether you are still a tax resident with SARS in South Africa, or whether you ceased tax residency formally through a process, then that can impact the rules and the restrictions in terms of the flow of funds. There are differences there. So important to take note of that. Transparency is a very important principle when it comes to the flow of funds. There isn't really a way around. You can't hide these transactions. They need to be transparent, and there are a lot of people that are interested in tracking them, etc. All right, so that's just the overall principle as well. And then some of the key role players, there are a lot of different entities that actually move money around for you and different ways you can do it these days. You don't have to use traveler's checks anymore, like we did many years ago. So commercial banks, so in South Africa, the larger banks are involved in this. You get banks that specialize a bit more in terms of forex and foreign exchange transfers. And then you get specialized forex providers, okay, quite a few of them around who focus just on these transactions. And then there are a lot of online platforms that have mushroomed, I'd say, the last certainly 5 years or so, I think from a 5 to 10 years from a transfer of money perspective. Offshore accounts as well. Now possible to have offshore accounts which you can use to transact in certain ways within certain guidelines and rules. All right, so those are just a couple of the facts that I wanted to highlight just to share what is important. So let's talk about money out. So the needs here are people such as expats who emigrate, sell their house, cash in their retirement annuity that they can now take after 3 years since when they left, and they want to get funds to Australia or the UK or wherever it might be. Supporting family overseas, so you might not have emigrated, you're in South Africa, you just want to send some money across, and also investing abroad. So you want to diversify your investments and actually put money offshore in a different currency, in euros or dollars or pounds or whatever it may be. How much can you send out of South Africa? So there's this concept called a single discretionary allowance, so SDA. That's 1 million rand per adult in a calendar year. So this doesn't need any specific sign-offs or approvals from anybody. And you can use this, for example, when you're on holidays and when you're traveling, and that comes out of the 1 million rand per adult. All right. So for most people, that's plenty of scope to actually be able to move money overseas and actually satisfy some of those needs we mentioned in point number 1 there. If there's a bigger need, there's an allowance called Foreign Investment Allowance, FIA, which is another 10 million rand in a calendar year per adult. And there are specific processes in place for that, SARS clearance, tax compliance, all these things come into play if you want to send larger amounts overseas, okay, money going out. So very important to note that generally with the flow of money, the source of funds is a focus area and something that institutions want to know. So we all know about money laundering, taking clean money and taking dirty money and making it clean rather through a process of layering or washing. You get all these different kinds of concepts. So SARS is very focused on specific procedures required for taking larger amounts out of South Africa. Their point number 5 there, their concept's called tax compliance status, TCS it's called, and there's a thing called TCS PIN. All these are procedures and requirements and controls that are in place to actually ensure that when people take money overseas, their tax affairs are in order and everything's above board. Lastly, just to mention in terms of taking money out, planning is really quite important, especially for larger amounts. Planning and timing and getting advice for larger transactions from the appropriate people is normally a good idea, so that you don't do the wrong thing and you do it in the right way. All right, so that's just very high level on transferring money out. Money in, it's a lot simpler in terms of getting money into South Africa. There are actually no limits or restrictions in terms of bringing money back into South Africa for anybody. But transparency, again, is always the principle. Okay, so people want to know where does the money come from. Money laundering is always that issue. Doesn't matter which direction the money goes to, if it goes in or out. Source of funds needs to be declared to SARS and the South African Reserve Bank so they can track the source of funds. And then timing in terms of money in and out, really. Exchange rate volatility. The rand can be quite volatile, so certainly for large amounts, bringing it in again, you want to try and see how's the rand doing versus the currency where the money is, how's it at the moment. Okay, so that was a whistle stop tour, really just very high level in terms of funds and transfer of funds and flowing in and out of South Africa. Really important for expats and want-to-be expats to take care of and to get to the right partner to help them in terms of your needs. All right, so that's the end of that session. And then I'll hand over now to Colleen Quist for our next anchor topic, Rerooting. Colleen's been on all our webinars. She speaks in all our countries where we are, and we enjoy listening to what she has to say. In fact, today is a very interesting session, very emotive session around what happens when things happen to our loved ones while we are overseas. So I'm going to hand over to Colleen. Colleen, thank you very much. And we've just got a little picture here of Colleen. There you go. And I'll hand over to Colleen. Thanks, Colleen. Over to you.
Howzit Expats. This is Colleen Quist with Rerooting. Recently, I was grappling with an issue of, a decision as to what should I do. A friend of mine, who'd been around for 27 years, so a friend and a colleague, passed away She passed away unexpectedly. And of course, feeling brokenhearted. But also the decision then came up as to, do I travel to her memorial or do I connect online? And so that is a decision that, after much debate and discussion with myself, also decided, okay, I will attend the memorial service online. Of course, while I was thinking about that, I was realizing that it's way easier for us now because online is an option. Not so long ago, online wasn't an option. But it also made me realize that as expats all over the world, no matter where you are often going to be faced with the decision of, do you fly home? And I know, of course, that you've got more than one home now. But do you fly home to South Africa? Do you fly home somewhere? And of course, it's not only for the passing of a friend or a family member or a loved one. It's also about when, for instance, maybe an elderly member, listen to me, an elderly parent, for instance, is maybe sick. Do you drop everything and fly home? Of course, do you then keep on flying home? I mean, I'm reminded of my gran, who we ran down to Durban for so many times, because that was it. She was checking out. But then it's almost like we all descended on her doorstep, and it was almost thinking, okay, second wind there. And she didn't pass away. Well, not for a very long time. So that's also about, do you decide at the time? Do you feel like there's an obligation that you have to? Of course, we also know we go to memorial services, not necessarily for the person who's passed away, but for the people who left behind. But practically, it's not always possible from where you are in your career, how far away you are, and also from a budget point of view. When we bring in finances, it's not always possible to jump, off we go. And of course, I've been speaking about when someone passes away. But there's also things like weddings. Suddenly your friend gets married across the world, and do you go? Don't you go? Can you go? Are you able to go? What also happens is, like, it's different when it's your planning in your budget and you know what's possible. But suddenly, often people spring these things on us with no warning. And have we saved up? So the question as well is that, what do you do? It's not only funerals and weddings. It's also things like 21sts, or your best friend has a baby, or you are wanting to see your grandchildren, or maybe you want your parents to see your children. And so it's also we've got to then see, okay, what do we go home for, our other home, and what don't we go home for? Do we connect? Do we show our parents, our children online? Do we have a virtual relationship with people? Do we go to the 21st or the wedding or the 60th? Because remember, it's not only young people who leave. Do we go to the 60th virtually? So sometimes for me, it helps to think through these things, to ask questions. Also, what happens as well is that if somebody has passed away, if it was locally, or if it was the 60th or the 21st, or you want to go see the new baby, if it's local, it would be you and your partner who would go, and maybe even your children. But when it is far, far away, who goes? Is it only you? Do you take your partner with? Do you take one child, two children, no children? So it helps to be able to talk through these things and see them as a possibility. And then, often we'd say, oh, but there's no ways I would not go to. But at the time, in the chapter that you're in, it may not be possible. So it's also important for us to be grateful now that online is a possibility. And as much as we hated it during COVID, where we went to online everything during COVID, at least it allowed us to connect. It allowed us to be there. But ask yourself, ask your partner, ask your children, what would happen if, and what will we do? Just to get people's ideas of, no, categorically, yes, we will go, or no, we wouldn't, or yeah. So that's my message from you for this week or this month. I hope that you're all doing well, that you're thriving, and that you are having fun. So, for Colleen Quist from Rerooting with Howzit Expats, I'm signing out.
Thank you very much, Colleen, for that thought-provoking session. Really lots in there to think about, and there's certainties in life. Certainly you think of like death and funerals, etc., and these are things that we've all got to consider in terms of having loved ones and friends living elsewhere in the world, and how we cope and how we contribute and what do we do, can we be there physically or not. So thank you really very much for sharing your personal story, and condolences to you for your friend's passing. So thanks, Colleen. We move on to our last anchor topic session for the day, which is our Ubuntu slot, presented by Garvin Rush. Garvin is the head of Dublin Tour Guide. He owns that business, and he's been with us from the start in our Ubuntu slot in Ireland. Really interesting session today. I think you'll really enjoy it. I enjoy all Garvin sessions, in fact, and been getting some good feedback on them as well from people. So I'll hand right over to Garvin. Garvin, over to you.
Hi, this is Garvin from Dublin Tour Guide. We do private walking tours of Dublin. And today I'm going to tell you a little bit about Irish games and their impact and connection with the local community and society as a whole. So, bit of background, way back in the 1800s, in the middle of that century, we had the Great Potato Famine, the Great Hunger, which after that, we had obviously a feeling that we didn't want to be Irish anymore. So, Irish language, Irish culture in general was dying off at an unprecedented rate. And thankfully, there were some people that recognized this and realized that they had to do something to stop it, to at least reduce it, and hopefully actually bring back that culture. One of those fellas was W.B. Yeats, great Irish poet. He was involved in the literary revival to help give people a sense of love, admiration for Irish culture through poetry, plays, the theatre, and literature in general. So that was one arm of the Celtic revival. Another arm was the Irish language, which was somewhat successful, but probably the most successful arm of it was the sports revival. So bringing back Irish games that had been repressed under the British system. And in 1884, this fella here, Michael Cusack, set up the GAA, the Gaelic Athletic Association, with the view principally to encourage these sports, rejuvenate them, and inspire a love and admiration of them in the Irish people and indeed farther afield. So we have Michael Cusack to thank, amongst others, for setting up the GAA and creating Croke Park, which is the national stadium where these games are played. Which games? Well, hurling, right? This is probably the most unusual and impressive looking of the games. There's a female version called camogie with similar rules. Or I should say similar look, slightly different rules. Then there's Gaelic football. This is not Gaelic football. Thanks, Google. Well done. But everything else is Gaelic football. And this is visually a cross between rugby and soccer. And then we have an unusual one, which is a handball. Now, what you're looking at here is not Irish handball. This is Olympic or European handball. So throughout Europe, this is what they would call handball. Whereas in Ireland and also in the US, This is what they regard as handball, kind of like squash, except you don't have a racket, you're using your hands. And this game used to be quite popular. Maybe its height was the middle of the 20th century, but as you can see from images like this, it's in decline now, not so popular anymore. But the other games, Gaelic football and hurling, are kind of the big two. Uh, Football would be more popular than hurling, principally because more of the counties play it. And the association itself, the GAA, its goal, as I said, is to encourage the practicing of these games in the community and to bring them back. And in local, or I should say rural, small communities throughout Ireland, the GAA plays a pivotal role as the glue to keep the community together. Historically, the Catholic Church was the main cohesive factor for the Irish community. And, you also had the pubs and people coming together and using that as a nexus for communication. But both of those are in decline in modern Ireland, and the GAA is still going strong. So you can see that it plays a very important role in keeping people together, and it's a voluntary organization. So the people that are involved in this are doing it really for the community. And you can imagine just what that means when the players feel like they're supported, and they do need the support because they don't get paid. Even at the highest level, the county level, they are playing for their county, the pride of their county, their pride of place, and really that is part of the fantastic values of the GAA, which are obviously to endorse the sports themselves, to make sure that every family in Ireland could afford to go to Croke Park to see their county play. So the prices for tickets are reasonable. The players themselves, as I said, they don't get paid, and they don't have their names on their jerseys, just their numbers. Even just having the jersey and sitting on the bench is enough, right? It's people take enough pride in that. So there's a good balance of pride for the county and humility as an individual contributor. Typically, also, the players don't switch teams, right? I mean, they don't get paid, so why would they switch teams unless they've moved somewhere? So typically, you play only always for your own county, for that sense of community spirit. So it's interesting, particularly when you go to the countryside, in other words, outside of Dublin, and you'll recognize the commitment that people have to the GAA. And, if you were to live in Ireland, it would be quite an important thing to get involved in one of these sporting competitions, sporting organizations, because, as I said, they are quite important for keeping everybody together. So I hope today's little lesson was interesting, made you feel a bit curious to learn a little bit more about the Gaelic games, and the clubs that we have here in rural communities. And until next time, I've been Garvin from Dublin Tour Guide, and I'll talk to you soon.
Garvin, thank you very much once again. Really, really interesting. Really enjoyed that session. Thank you so much. Look forward to seeing you next month. So we'll just conclude then today's webinar. A couple of slides just to say that our community membership is available to you. If you're not yet a member, you can just sign up for all the benefits, €9.90 a month or €99 per year. And that gives you 12-month membership to all our benefits that we offer. So please do join us. Really an important milestone for Howzit Expats the last couple of weeks. The ostriches are really curious, wanting to support more South African expats. So we've just, you may have seen this in social media, launched our Wellbeing barometer. We have a survey out at the moment, and that's what it looks like if you've done it. We have partnered with two companies. In fact, one's called Ask Africa, who are a leading South African global benchmark company. Benchmark in terms of service and brand strength. and we've partnered with them to help us with our global well-being barometer. Basically, what this is all about, in a nutshell, is we would like to establish, in a more formal way, in terms of getting data, we'd like to establish the drivers of the success and challenge that expats face, South African expats specifically. Also want to look at why people move, why they come back home, what are the differences in different families. This is completely anonymous. You don't give your name at all. But I would like to encourage you. We've got a good pool, a large pool of participants, but makes it really valuable. So, in summary, and in fact, it's just been World Mental Health Day just a couple of days ago on the 10th of October. So we've posted out on that on our social media sites as well. So we'd love you to take the survey, and it just takes about 15 minutes to do the survey. I'd really appreciate it. There's a short video as well you can watch on our YouTube channel, and you can see the link at the bottom there as well. So, financial education for kids. We are coming out with a few more movies shortly. We're very focused on financial education for children, and we're using AI videos to support that. So, just to close off today, if you enjoyed the webinar, please tell your South African friends. We'd love to hear from you all. We're very active on social media. We have a LinkedIn channel, Facebook channel. We have some exciting campaigns in Ireland at the moment. We have Uncle Bok, who's sending out a little pamphlet with some of their orders, or most of their orders now, just till the end of the year, or until stocks run out. And you can win that fantastic Ilse van der Merwe Timeless South African Iconic Dishes book over there. And then we also partner with Cake Sisters. There's some vouchers there that you can get. They do lovely peppermint crisp tart, Cook Sisters, malva pudding, rusks, all those sort of things. All right, so that brings us to the end of our webinar. This was our first pre-recorded webinar for Ireland, so we hope you enjoyed it. We will be back again in Ireland on the 18th of November, and we look forward to seeing you there. Please tell your friends about us, and any feedback you have, you know where to get hold of us. You can contact us through our website, or on email, or through social media. So thanks, folks. I'll see you next time. Cheerio. Thank you.